This Week in Startups is brought to you by Walker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at walkercorporatelaw.com. And HostGator, your one-stop shop to getting your business online. Your domain name, your website design, and even your marketing. They've got you covered. Have questions? Their team is there 24/7 via chat, phone, and email to help you. Start today for 30% off with coupon code TWIST.
Today on the program, Ann Winblad, the famous venture capitalist who's been at it for 26 years and started her first software company in 1976, the same year that Microsoft was formed. Ann Winblad, technology investing legend, on today's This Week in Startups.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody, welcome to This Week in Startups. This is the program where we talk about entrepreneurship, technology, and today is a very, very special episode for me because I've been in the technology industry since the 80s. And when I was growing up and I was a teenager, I used to read Release 1.0 by Esther Dyson, who's been on the program a couple of times. And I used to read about Bill Gates, and I used to read about Steve Jobs and HP and all these companies. And I used to read PC Magazine and InfoWorld. These were my Bibles. I was a nerd. I loved this stuff, and I had a 300 baud modem. And I used to always read about this venture capitalist named Ann Winblad. And I always said, hey, someday I might make it out to Silicon Valley. I might be involved in the technology industry. And today, I'm super pleased to have Ann Winblad on the program. Welcome, Ann.
Thanks for that great introduction. I will make one correction.
Correction, yes. You became a venture capitalist.
No, when you say I once was a nerd, I
Yes.
always say once a nerd, always a nerd.
That's
So
true.
You can't use it in the past tense.
I can't, you're right. I'm still a nerd and geek, guilty
That's
as
right.
charged. But you were a geek before the term, and a nerd before the term was really used. You started your first company in the 70s, a software company?
In the late 70s.
Late
So
70s.
We were leaning towards the 80s in
Leaning towards the 80s.
1976.
1976, you started the first software company, and that was Open
Systems.
Systems. What did Open Systems do? Why did you start it?
Well, today we would be called an ERP software company, much like NetSuite. We wrote accounting software for mid-sized companies and the accompanying platform that other people could write extended apps on. We were actually an open source company because we gave away our source code to our resellers so they could fork the code and write their own vertical apps, which was considered very controversial at the time.
Yeah, I mean, Bill Gates was going around town trying to stop people from stealing BASIC at the time, right?
That's correct.
Yeah.
But we were giving away our software.
Wow. And you learned how to code. Actually, you might be one of the first female programmers.
Well, not really. There's
No.
a lot of programmers before me. There was Ada Lovelace.
Of course,
and
yes.
Those people, those dead people.
Right.
So I'm still alive.
Still alive.
Right.
So
So anyway, and a lot of engineers in the Valley
Right.
that were writing software that the founder of Cisco. But I learned to code in college because in my era they weren't teaching any programming during high school. And most people weren't focused on programming, they were focused on hardware. Machines were still pretty big. You didn't get to see them. They were in hidden, refrigerated rooms. So when I learned to program in college, we were just on the cusp of the end of time sharing, beginning of mini computers, and just right around the corner after I graduated was the PC era. It was not visible to us, but we could see machines shrinking and software looming as really the center of the universe versus the hardware itself.
And at that time, venture capital was just starting as well, right?
Well, really, venture capital, there's a reason it's called Silicon Valley. It's, even though last year of the $41 billion invested by venture capitalists, over 60% of it went to software companies. Software was a very tiny, if zero, investing area. In fact, when we built our software, think of us as NetSuite of the late 70s, we had to find hardware dealers and hardware companies to bundle our software on it to resell it.
Right.
And that was the only time I ever met venture capitalists, the ones who funded the hardware companies.
Right. And so you wound up selling that company, I don't know how many years later, but it was for a colossal number, I've read.
Well, it was a colossal number at the time.
Right.
Because, first of all, no one had ever really sold one.
Yeah.
Just to put things in context, when Microsoft went public in 1985, their revenues were $75 million. So millions,
Right.
even anything less than $100 million was considered astronomical.
Right.
So I sold my software company in 1983 for $16 million in cash.
Amazing.
It was amazing.
Yeah.
I was the only person who had actual cash in their wallet of all my PC colleagues.
Right.
Everybody else had credit cards with credit limits of about $2,500
Right.
at the time.
Was this the moment that people started to realize this is going to be a big industry when you sold the company?
No.
It made it kind of real.
They started writing articles about people exiting their companies. Microsoft went public, 18 months later. A little company called Lotus that you're familiar with
Yes.
went public. So we
Mitch
saw
Kapor.
Mitch Kapor, really talented investor himself today.
Yeah.
And Mitch and I were born on the same day in the same year, so we definitely are colleagues.
Yeah.
But they started looking at who are these people and what are they doing and why are people paying them money and what role does software really have? Remember, in the 80s, we went away from bundling with hardware for the most part to selling our software in cardboard boxes
Packaged
in
software.
retail stores.
Yeah.
So that was a flawed idea as well. We all bought shrink wrap machines. We had forklifts to haul around these boxes. We shipped it all over.
It was a very physical industry. Yeah.
Well, it was silly.
Yeah.
It was like nailing Jell-O to a wall. I mean, it was a silly thing to do. It was very expensive. It drove a lot of companies out of business because they didn't do that efficiently. It was sort of like we were all Amazon. And we didn't actually know who actually bought our software because we never got much from the retailers unless we had insistence on user registration,
Right.
which was optional.
Right. They had to fill out a card
They
and
did.
mail it to you. Hey, I'm using your software. Here's the serial number.
That's
and here's my
correct.
name. But this is before people had email addresses.
Yeah, so it was a slow evolution for the software business. When we started our venture fund in 1989, we were the first venture fund focused exclusively on software. And in 1990, our first full year, there was $350 million invested in software by all venture capitalists across the U.S. Contrast that with 2014, when the amount was about $23 billion invested in pure software companies.
And you formed the firm with Hummer Winblad. Obviously,
Yes.
you're the Winblad in that. But the Hummer in that is
John Hummer.
John Hummer, who was a...
John is a Princeton grad,
Yep.
undergrad. He was recruited as a first-round draft pick and played 6 years for the Seattle Supersonics
Right.
as a center.
Right.
Our average height is 6 feet, and I'm 5'2".
Right.
So that's a math problem for you.
Yes, he's 6'10" or something?
He is 6'10". So
Amazing.
he is the tallest venture capitalist. Bill Gurley's a tiny bit shorter.
Yeah.
And I am probably, admirably, the shortest venture capitalist.
And you guys started investing in what companies in the late 80s and 90s? What were some of the first companies you invested in?
Well, they were an exciting set of companies.
Yeah.
They included a company called Hyperion,
Right.
which was first called Arbor. And this was the invention of business intelligence,
Yep.
a company that went public in 95, same year as Netscape. It was the most successful offering of the year and was later purchased by Oracle for over $3 billion.
Wow.
And the total amount of money it raised was $7 million.
Wow.
We also invested in a little company called Powersoft,
Yeah, of course.
which was Mitchell Kurtzman's company in Boston. They did client-server development tools. It was the first company acquired for $1 billion. It was acquired by Sybase.
Right, the database
and-
company.
Exactly.
Yep.
We funded a little company called Central Point Software,
Of course.
which invented antivirus, merged with Symantec. A little company called Berkeley Systems, which
Of
did
course.
screensavers,
Right, the flying toasters, of course.
which was also acquired for a nice sum of money. So we funded 16 companies. We started the A round, So each of our funds have between 16 to 20 companies in them, which we carefully curate. 8 of those companies went public.
Wow.
It's a wow.
50%
Yeah.
hit rate. When we get back from this commercial break, I want to ask you on how you picked those companies. What was your signaling at that time when we get back on This Week in Startups? Hey, everybody. Let me stop for a moment, this amazing episode, and tell you about the Walker Corporate Law Group. Yes, they are a boutique law firm that specializes in the representation of entrepreneurs and startups. And Scott Walker is the founder of that company, and he is a personal friend of mine, and he does a great job working with startups. I have literally introduced him to dozens, maybe hundreds now, of startups, and they all rave about the services of the Walker Corporate Law Group because their lawyers have decades of experience. You're not going to get junior associates who are getting on-the-job training with your startup. No. They're going to help you with mergers and acquisitions, licensing, terms of service, privacy policies, formation, all this kind of stuff, fundraising, and they're really great at it. And they do fixed fees. They don't want to surprise people with crazy bills. They think that billable hours can reward inefficiency, so they'll just be fair with you. And that's what I love about them, because if you're a startup, you don't want to get that sticker shock and get a huge bill. Make sure you use the Walker Corporate Law Group, and you can do that by calling Scott Walker at 415-979-9998. 415-979-9998. You can email him, scott@walkercorporatelaw.com, or you can visit walkercorporatelaw.com as well. Scott at walkercorporatelaw.com, and let Scott Ed Walker on Twitter know, at Scott Ed Walker, know that you watch the program and you appreciate him supporting independent media like This Week in Startups. One of my oldest advertisers, one of my oldest friends in the industry, just a great guy, a total mensch, and he really takes care of the startups who work with him. Thank you, Scott Walker, for supporting This Week in Startups. Bye-bye. Okay, let's get back to this program. Come on. Hey, everybody, welcome back to This Week in Startups, the show where we talk about technology and we talk with entrepreneurs and investors. And today on the program, we have somebody who is both an entrepreneur and an investor, Ann Winblad, who you've been running Hummer Winblad for a long time now. It's 89 till now. You're going to be 99, 2009, 30-year anniversary coming up.
Yeah, it's 26 years.
It's kind of mind-blowing, isn't it?
Yeah, it is. It's really mind-blowing. Every time you think that you might actually have enough wisdom to make perfect picks, you realize that you've lost the venture capital handbook.
Right.
I'd love to be called just a capitalist, but that word venture looms large in what I do.
Now let's talk about this batting average on the first fund. 8 out of 16 went public?
Correct.
That's unprecedented, I guess. I don't know if that's ever been done before or done since.
Yeah, it was a pretty amazing fund.
What do you attribute that to?
3 things.
Yeah.
One is it was a very prescient time for software. We were really going from the PC era to the client-server era. And so the new companies had an unfair competitive advantage, very much like today when we're dealing with enterprise software companies that have to deal with everything at web scale, billions of everything. So we see legacy vendors drifting behind and the new vendors ascending.
Right.
That's why San Francisco is so alive with enterprise software today. Number 2 is we really had every software company coming to us. We were the only venture firm 100% focused on software. So the quality of our deal flow was unbelievable. If we made bad picks, it was because we were lazy, and we weren't lazy, we were new.
Right.
We also were fresh off our own entrepreneurial backgrounds. John had been a venture capitalist for 4 years already with a small venture firm after he got his MBA at Stanford. And our third person, Mark Gorenberg, was an engineer out of Sun Microsystems. So we were very contemporary with the code. We really wanted to be super successful, and we had every company coming to us, and the industry was undergoing a massive change.
What did you miss? What's the anti-portfolio from that time? There's got to be something
We
that
call
you
those-
just grind your teeth about.
Well, we call those sins of omission.
Sins of omission.
And
Here we go.
I can remember one really well. A wonderful guy in the Valley named Zvi Elon.
Zvi Elon, okay.
And Zvi, SVI, had a company called NetManage.
Okay, sure.
And he was selling basically commercialized TCP/IP over the phone. And he's a wonderful guy, smart, hardworking, and was unknown, and that's a quality we look for. We're not just finding pedigree, we're finding, breakthrough talent. And we made a big mistake that we didn't make later. And Svi, every time we talked to Svi, we bonded with him. He liked us, we liked him. We were a perfect pairing of a team to work together to help create a company. When I said we do 16 to 20 companies, we look for fit as well. And we told Svi no. And we told Svi no 3 times.
Wow.
He kept coming back. He said, Ann, John, Mark, I've got a term sheet, but I really want you. We said no.
Wow.
We called up Sun Microsystems, a big company at the time, and said, hey, this TCP/IP thing, and they said, we've got 40 engineers working on that. We're going to own this. We called Microsoft. They said, we've got 50 engineers working on this. We're going to own this. We called IBM. They said, we've got 80 engineers working on this. We're going to own this. So we called Svi back and said, hey, the whole world, it's way too competitive there. What we learned is the following. Svi had it done. He was selling this stuff like hotcakes. We would go visit him in his office about the size of this desk. And he'd go, wait, I got to check this phone call. It's another order, and slam it down and scribble down type in the order.
Yeah.
Oh, wait, I got an incoming order here. And he'd just be sweaty by the end of the meeting from taking orders. So what we learned is that's exactly the time you should invest. When people have armies working on something and someone else already has it done. What turned out is that I think Sun, Microsoft, and IBM ended up licensing Svi's technology. NetManage ultimately went public. It made its investors a ton of money. We could have had 9 out of 16 IPOs versus 8.
Yeah.
So that was a dramatic and great example of a learning and a sin of omission.
Yeah. And what have you learned as an investor is the key to success for entrepreneurs? Is there some signaling that you see now where you're like, hey, this person is difficult, that is going to serve them well, or this person is so difficult it's going to work against them at some point? Do you have signaling that when you see it today, or do you try to not have signaling?
It's back to this venture handbook thing, is that when we do have a deal blow up, it is usually not because some competitor showed up or we misjudged market dynamics. That has happened, but not usually. It is usually the people have self-inflicted wounds. And we look for, sometimes we only fund one person, very rarely, but frequently it's 2 to 10. And that ensemble really has to want to work together. And there has to be someone in that ensemble, even if they're not going to be the long-term CEO, who can get that company from Monday through Sunday, in the takeoff phase. And is also humble enough to know when they need to hire around them or above them, has enough hubris that they can lead the forces and declare victory when they make small victories, can keep their eyes on the tactical stuff while still realizing, hey, I have a strategy. That is really hard. Sometimes we get entrepreneurs who can do a lot of stuff, but they can't drive through a big strategy. So it really does amount to the right people matched to the right market opportunity at the right time.
And when you look at the market today, back then, how much were you investing in companies? How long would it take, and how much money would it take to launch a company in the late 80s, early 90s?
Well, our first investment was made in 1990, so we never saw the late 80s as investors.
So the 90s, early 90s.
For an enterprise software company, which is 99% of our investing, they were very capital efficient. I mentioned Hyperion, that was $7 million. Powersoft, $1 billion acquisition, probably less than 15. 2 things happened. Number one is that the cost of talent was a lot less and the competition for talent was less. The companies could go public earlier. There were boutique investment banking firms around, Robertson Stevens, H&Q, whose tactic was to take young companies public. We took Hyperion, then named Arbor, public after a $25 million revenue year. Today, you cannot take an enterprise software company public unless they're leaning into $100 million of revenue. And that $100 million is actually a lot more than that 25 because it's subscription revenue.
Right.
So it's probably leaning into 300 million before
Right.
the public markets will accept them. At the same time, the multiples for acquisition today are higher for an enterprise software company, but the time from start to acquisition, unless it's very, very early on, is about 7 years, and it's 9 to 11 years for an IPO.
Wow.
Wow.
Yeah. How does that change, you think, the market? So is the fact that the public markets are so discerning now a good thing or a bad thing, that companies are waiting so long? What's your take on that? Yeah.
Well, I think it's a good thing all in all, because the companies that go public tend to be long-lasting. Although there are early acquisitions of public companies still today. It has changed later stage investing. And you probably noted the numbers that we have private equity firms and public market investors doing the later stage rounds of these companies that are around longer. At that point in time, they can see that these companies are performing almost like public companies. They have predictability in their revenue, they have great teams, they have a global reach, they have renewal rates, good pricing strategies, and they probably knocked out a lot of their competitors so that they are owning their market space. That's changed a lot, and that is relatively new. We also have corporations investing mid-range for these companies because they want to be on an innovation curve. And they would not be pre-IPO investors, but a mid-range company is like yesterday's public company. So we're attracting a broader palette of investors as the companies grow. At the early stage, you really need to have companies that are dedicated to be around, or investors dedicated to be around for the long haul. That's why there's fewer A-round investors. Lots of seed, lots of late stage, fewer A-rounds, which is what we do.
It's the hardest work, isn't it, the A-round? The
Well,
seed
it's-
and the A-round is hard?
It's the funnest work. I mean,
Yeah, why is it the funnest?
well, because it's sort of like spinning straw into gold.
Yeah.
It's
Your
so-
eyes, by the way, just like lit up when I
Yeah.
said, like, why is it the best? You're like, why isn't it obvious?
It's so magical.
Yeah.
I mean, it's really, every day I get to audition the future. And
Right.
people come in and tell me how the future is going to look. And there's some pretty amazing views of the future.
Mm-hmm.
And we do pure software and enterprise software, so it might sound kind of boring, but it's not. And, they come in and tell you, hey, here's why I'm doing this. Here's what I think this is going to be. Here's why I think it's important. And, I've got a big mission, and, do you want to get on this mission ship or not? And it causes you to really think ahead. It causes you to really be thinking hard. You don't get any facts. You get assumptions. You get assumptions, tiny facts, maybe a few customers, and maybe not. And you get people that are really, really gunning for, they're digging into their intellect. They're digging into their physical stamina as well as intellectual stamina. They have amazing imaginations because they have to make this up. They have to pull together the ingredients they see unfolding. So it's very magical. And when these companies actually turn into really large companies, you can think back to the day that, they gave you that pitch and think, wow.
What's the most memorable pitch? What's the most memorable where you just said, my God, this team, this entrepreneur is going to change the world? It was just crystal clear to you in that meeting.
Well, not so much change the world, but deliver enormous value
Yeah.
In the software world.
Yeah.
And, when the Arbor guys came in, it was Jim and Bob, just two guys. Bob worked for NASA Ames. He'd never written commercial software. And Jim was a sales guy for a funky analytical company no one had ever heard of, and I can't even remember the name, like ComShare or something like that. And, they unfurled this piece of paper in front of us and said, we've talked to 500 companies. Here are their names. Call any one of them. They need this software. We need money to write it now. And we thought, okay, well, we got a sales guy here for sure.
Right.
Can Bob write this? But if I take their pitch and overlay it into what would become business intelligence, Hyperion, Cognos, Business Objects, all big winners, it was exactly as I said it. A more recent one is a kid from Malta, Ross Mason, now living in San Francisco. An analyst called me up Jason Maynard, well-known enterprise analyst, and said, I'm covering all these guys like Oracle, IBM, and Tibco, and this company's name keeps coming up. It's got a mule in it, MuleSoft, and they're everywhere.
Right.
And I said, well, who are they? And he goes, well, I'll find out and I'll call you back. And he goes, it's this guy, Ross Mason. He lives in Malta.
Malta.
Malta. Do you know where Malta is? It's
No.
a test. Well, I now know where it is.
Where is Malta?
It's over there off of Spain and
Yeah.
France and Italy. It's
Right.
in that rich people's vacation paradise area.
Got it. Yeah.
And
Like,
it
it
doesn't
sounds like
have,
Monte Carlo, Malta.
it doesn't have any trees.
Where should we put the boat? We'll park the boat outside Malta
Exactly.
or Monte Carlo.
Yeah,
It's
yeah,
one or the other.
exactly.
Yeah.
And-
Nice. Who knows?
Right.
Sardinia?
So anyway, Ross had found a co-founder here, so there were two of them. And, Ross said, look, we built this open source thing called Mule, and it's an open source enterprise services bus. Staying with me now? And it's the next generation integration platform. You're going to have all these devices, you're going to have all these apps, you're going to have all these cloud things and all this on-premise stuff, and you can't take this old stuff that, was, app servers like WebSphere, WebLogic, the Tibco stuff. It's just not going to scale to web scale. Two guys. Ultimately, the second guy left, leaving Ross and 5 developers. I think 3 were in Buenos Aires. 1 was in Germany, and I never actually knew where the other one was. And we funded them. Today, MuleSoft is based in San Francisco, has publicly said their revenues are at a $100 million run rate. They have 600 employees and 200 employees in Buenos Aires. And Ross lives here now. It's a huge success, one of the fastest growing enterprise software companies. And all we saw was the magic of Ross.
Yeah, the entrepreneur. All right, when we get back, I want to ask you about bubbles. A lot of people are speculating we're in one right now. You've lived through a couple. I've lived through a couple. You lived through a couple more. I want to know if you think we're in a bubble when we get back on This Week in Startups. Hey, everybody, let me stop for a moment and tell you about HostGator. You can stop thinking about the business you want to do, and you can just do it. The first step is web hosting and a domain name from our friends at HostGator.com. It's a one-stop shop for your online business. You can set up WordPress, drag and drop builders, easily set up custom email addresses. They have in-house design, SEO, and PPC, pay-per-click services. So as you grow, you'll be able to easily transfer from your $4 a month shared hosting account, and you'll have dedicated services, VPS, all that great stuff, 24/7, 365-day a year live support via chat, phone, or email. We love them so much that Twist is hosted with them. That's right. It's super affordable compared to things like Amazon. They have reliable service, and we've had a really great experience with them. It's super quick to get set up, and everything is clearly explained and very nice and neat with screenshots and everything. The first 100 Twist listeners that sign up with the promo code TWIST25 will receive 1 year of HostGator hosting package for just $25. That's right, TWIST25, and you will receive the 1 year of the HostGator Hatchling package for just $25. This includes tons of disk space, unmetered bandwidth, MySQL databases, and multiple custom email accounts. So don't worry, if you're not one of the first 100, you can still save 30% using the promo code TWIST. Thanks again to our friends at HostGator for hosting thisweekinstartups.com and for providing all this great service to our listeners. Go ahead and thank at HostGator on your Twitter handle. Okay, thanks again, HostGator. Let's get back to this amazing program. Hey everybody, welcome back to This Week in Startups. I'm Jason Calacanis. You can follow me on the Twitter at Jason, and the show is at TWI Startups. You can follow Hummer Winblad at HumWin, HUMWIN. And my guest today, Ann Winblad, of course, the co-founder of Hummer Winblad Venture Partners. Okay, we've lived through a couple of bubbles.
We're still here.
We're still here. But we had the real estate bubble pop in 2007, 2008 timeframe. We had the dot-com bubble 2000. We had 9/11, which was sort of a back-to-back. We had that bubble in 95, I think, with Netscape, or around that time. We had some sort of like mini bubble then. And we had the great stock market crash in 1987.
Right.
I think that's all of them in that time period about.
Yeah.
Do you think we're in one now? Does it feel bubbly to you? And do you think it's going to pop, or do you think we're just going to have a little sideways action? What does your radar tell you?
Well, my radar tells me that it is a seminal time for building new companies. It's a web scale era, and for enterprise software, that requires a lot of new pieces. So every piece of the stack, from the development tools to the integration tools to the analytics tools to the security tools, is being redone to fit that stack. And we're seeing that in really great companies here, and companies that have already gone public are preparing to do so. New Relic, Workday, ServiceNow, Salesforce. Those are all relatively young companies that are operating at hundreds of millions of dollars of revenue, and that indicates that they're real, that they're not bubblicious in any regard. Now, what things do we worry about? Well, we worry about the rent here in San Francisco.
It's crazy.
It's crazy.
$100 a square foot or more in most parts of the city.
In some parts of the city.
Some parts of the city.
So, we look at our companies and say, hey, don't take on more than you can handle. The length of leases, the cost of leases, it's getting pretty expensive to be a new company here if you already are not augured in. We have some winner-take-all markets, not probably in our investments, but more in the consumable area, although some in others. Lyft versus Uber.
Yeah.
I love Uber. I'm a big Uber customer. I can't imagine life without it around the world, and I'm horrified whenever it goes away in a city I travel in.
Yeah.
But both those companies have raised tons of money, and it's hard for me to imagine they'll both win. So in the winner-take-all markets where there's a big money battle, there could be a sinkhole for one of them. And maybe not, but maybe.
And you would tip that one in Uber's favor, I hope, as an early angel in Uber.
I'm an Uber customer,
Okay.
and I don't trade flight with Uber. So, from a customer perspective, yes.
Yeah.
The public markets, are always very discerning since these last busts for new companies. But should the public window close, it does change everything. It changes, the liquidity paths, the amount of money the company can raise. As we said earlier, these investors coming into pre-public companies, private equity and public market investors, they will stop doing that.
Right.
So companies,
we'll lose those late-stage people.
Exactly. So companies will have to last longer on money from venture capitalists and maybe corporate investors, although they tend to run for the fences in down markets as well.
Right.
So
when the market comes apart, people lose a lot of funding sources.
Yes, they do.
And they need to be sustainable. That's
Right.
the best advice, isn't it? To have your business be sustainable without further funding.
Well, you're an angel investor,
Yeah.
and we've been impressed how far angel deals can go on a little bit of money.
Yeah.
And we're very impressed with some of the disciplined angel investors that bring A-round deals to us, where companies have been very frugal with a small amount of money. The angel investors have said, meet these milestones or you'll never get an A-round. Very Darwinian at the A-round.
It is, isn't it?
It's very.
It's never been this Darwinian, has it?
Well, there's never been this many seed deals.
There's too many seed deals. Or is it a good thing? How do you look at it?
Well, it depends upon if the angel investors understand that there's only so much A-round money. We're not increasing the A-round money. And
why is that not happening, do you think?
people don't like being A-round investors. You're in these deals for 7 to 10 years. You do an A-round, you can't brag about your company at a cocktail party for 5 years. There's lots of stuff that makes it work.
Right.
And, some people don't like as much work. They like to know what they're investing in. We get assumptions, not facts. We get a little bit more facts from well-curated seed round deals where they've spent the money wisely and either done all their pivots away from venture investors or have augured into a key edge of a market, which gives us some proof that they can at least operate and execute together.
And is that what you're looking for those people coming out of the seed round? They can execute on a vision, they can build a team.
Part of it.
Yeah.
Part of it. And we don't expect much of a team. We're usually seeing less than 10 people.
Right. Half dozen people is normal.
Yeah, exactly. We're seeing that they really have some proof that a market exists. And that proof may not be money. It may be proof that there is customer engagement. It may be, customers are using it for free. It may mean that, they've got a tiny piece of the software being licensed where they can land and expand. on that customer base. So anyway, if
Land and expand.
yeah.
The window's open. You can kind of crawl through.
Right, where getting large customers, especially to part with their money, is not simple. So getting customers to part with their money by proving you have some value, even if it's just the tip of your spear,
Yeah.
is very important to us as A-round investors. So if the market gets raggedy, meaning the public markets, that affects us. If some of these winner-take-all markets, a big company combusts, that'll affect everybody. Because not everybody can discern, which part of the markets are doing well or not. If corporate investors leave, they've been in 51% of all these deals,
51%. Wow.
have corporate investors in.
Wow.
That condenses the amount of money. And if larger companies decide we're going to build it all ourselves versus acquire,
Then the
to
exits
grow,
are gone. Yeah.
then the exits are gone. So it requires a really well-groomed food chain, a well-working food chain of exits, timelines, sophisticated investors, starting with the A round, B round, growth rounds.
Yeah.
We like the angel investors because we really like this. Someone is also out there, auditioning all these entrepreneurs. We used to have to convince people in 1990 to be entrepreneurs.
Right.
Leave your big job.
Get out of
this will be
NASA
fine.
Ames. It's going to be okay.
Exactly.
You'll be able to send your kids to school.
And now we sometimes convince people that maybe entrepreneurship is not their gig.
Right. There's a lot of people who should be part of a team, but maybe not starting a company.
Perhaps.
I see it a lot.
Well, you probably see it as auditioning the future from the angel.
From the
lens
angel perspective, I see a lot of
from the
people
A-round.
coming in who are just not, I just know that the second it gets hard, they're not going to have the resiliency.
It's
can kinda
really
tell,
it's
yeah.
really hard building companies, and that's
Brutal.
It's hard work. It's complexity and uncertainty in spades.
So, do you think that there's a bubble now? I mean, I can see what happens when the bubble bursts. Certainly, these late stage investments are at really premium prices, the valuations, but they're based on real metrics and revenue. So, how does it feel to you? Like, you have to have a spidey sense by now.
Well, it feels okay in the enterprise software space.
Great.
Because we don't see knockoffs of everything being funded. That was one of the things that happened in 1999. If somebody funded one of them, I guess the last set in the enterprise software space that looks kind of knockoff-ishy is, containers.
Right.
Docker gets funded, and there's like 50 Dockers.
Yeah.
So when you see that happening, when companies have to enter in a race, and there's 10 lookalike companies with the same description, the same mission, they all raise too much money because they have to get ahead of each other. And the money is used for marketing too prematurely. Customers, are getting a great deal because there's price competition way too early.
Right.
And companies are racing ahead too fast in a money race versus doing execution at the pace they should. We see a little bit of that in the enterprise software market, not a lot. Consumer markets, a lot.
A lot.
A lot.
So you have an Uber, then you have a Lyft and a Sidecar, you have a Sprig, you get a Spoon Rocket, et cetera.
Yeah.
A lot of copycats.
Yeah. The other thing that's happening in the enterprise software market is we're arms merchants. We fund core enterprise software. We fund the tools, the arms that you use to build the other stuff, from DevOps to integration to analytics, companies like Burst, Sonatype, MuleSoft, companies like that.
Right.
There's a new trend in enterprise software which made up quite a bit of money last year, $100 million in financial technology.
Yeah.
And we call those investors industry unbundlers, where they're looking at whole industries, logistics, consumer packaged goods, financial technology, and saying, which piece of that industry can I peel off? How much money has gone into payments? That's one of those industry unbundler things. And there again, we're seeing some winners jump ahead, and others lag behind. So that's a new enterprise software area that's a little unknown. How do you take pieces of industry? Where do they scale? Can those become public companies? We're seeing evidence that that's working in the financial technology space and in the health tech space. The oil there was big data. Add data, you get something better. But it's really being carried on through almost every vertical industry. Unbundle them, invest in those pieces as disruptors versus
So there's some
funding
bubbly,
core enterprise.
there's some bubbly aspects to what's going
Some
on.
bubbly aspects, lots of companies.
Lots of companies could
Yeah.
be the bubble, but lots of revenue, which is good. That's encouraging.
Well, if you get real revenue and you actually have high gross margins,
Yeah.
and you have a business model that makes you live off your own oxygen over a reasonable period of time, then those companies are not in bubbles.
Right.
Unless what's driving them is some craziness on the part of the customer. There's very little craziness in the enterprise software
No,
sector.
people are pretty rational, right? They don't buy more than they need.
Well, the procurement process is really tough.
Right.
They have annual budgets to do this.
Right.
If the software doesn't work, they're usually buying these on annual subscriptions now.
If they don't use the software, they just get rid of it.
Well, they don't pay the next year.
Right.
So they don't buy these big perpetual bites like they used to. So the customer has a lot of leverage there.
Right.
And if customers are renewing from the company is delivering great value, the company grows. That model forces companies to get into the oxygen model. If you're living off just venture funding, that's carbon monoxide, and it kills brain cells
Yeah.
if you live off of it too long.
It seems like some companies I'm finding, their core skill set becomes pitching VCs and raising money. You see this trend where people are just so good at raising money, the founder gets kind of addicted to that path, and instead of focusing on the product, they're raising on fundraising too much?
Well, it's an interesting point you made up. As a leader of a company, it is a skill you have to have. And we've seen some companies, even a couple of ours, over the last 26 years fail because we've had great strategic leaders, but they're not good at raising money. Because we can't raise the money for them in the follow-on rounds. We can introduce co-investors and have some followers that follow our fund, but they're not investing in us. They're investing in that company. So it's a skill you need, and it's a skill that we look for. We have turned down some deals because we've said, look, this team, if this person wants to be the CEO, they're not a very good fundraiser. We're saying that we're willing to give them money, but how are we going to fix that in the future?
Right.
At the same time, if your strategy is lagging behind your fundraising skills, that's a delta you do not want to have.
Right. You're great at raising funding, but you can't get your product to market or product market fit or whatever.
You haven't achieved a multiplier effect. You don't have scaling principles. I mean, scaling principles are really, really important whether you're a consumer or enterprise.
Of the people in the 80s, who was the most impressive? When you go through the sort of famous people from the 80s, Jobs, Gates,
Well, Bill
Ellison.
Gates was the most impressive to me
Yeah.
because I can remember having a conversation with him the year before Microsoft went public. And at that time, there was no company that had reached $100 million in revenue in the software area. MSA, a mainframe software company in Atlanta, was about to reach $100 million. And Bill said to me, Ann, we're going to go public at Microsoft off of $75 million in revenues. And I can see my way to $500 million in revenues, but I can't see any further. And I said, all right, show me the way to $500 million, because
Right.
no one is even thinking about $500
Right.
million. And the interesting thing about Bill was that the question you asked before, he was he still is an
Right.
amazing strategic thinker. Yet every detail of that company, of Microsoft, was at his grasp.
Right.
Jeff Bezos is a guy like that today.
Right.
Very strategic, but understands everything at a micro level at Amazon.
So there's some quality of being a visionary, but sweating the details that they share in common.
Well, being a huge visionary. I mean, imagine, everybody has a creation myth
Right.
of their company. And it was interesting. We met Bezos as he was raising money. And we were a brand new venture fund. We were only in our second fund, so we didn't have much consumer proof. And John and I went up to meet Bezos and sat beside him. And he talked about, Amazon and, the Amazon bookstore and how commerce was working, how he's going to do direct ship. And, he had business cards laid out from, 30 venture capitalists at that point in time. And it was pretty clear he'd already chosen his venture firm, which was Kleiner, who'd been around a long time, had much more proof than us that they would be a better investor for him. But he really, really, really impressed me in that meeting alone, just talking about book selling, that this was a guy focused on scale, knew the details, was a voracious learner, had intellectual stamina out the kazoo, which Bill did as well. So in the 80s, no question. And Bill was always listening to everything everyone said.
Right. He was a sponge.
Exactly.
At the taping of this episode, the summer of 2015, there was a really brutal article in the New York Times on Sunday about the Amazon workplace. You've read it, I'm sure. What are your thoughts on that? Do you think it's as bad as they made it out to be? Do you think that it's just choosing to be a Navy SEAL or an Olympian if you want to go work for a Jeff Bezos, par for the course? Shocking?
I try to recruit people out of Amazon all the time, and we work closely with our companies with AWS, and have since the inception of AWS. And you try to recruit people at points where they might be fatigued, where they might have a slight altercation with their company and be ready for a change. It is hard to recruit people out of there. And they do say that they have to work hard and, that it is a demanding job. But I have never heard anyone, people that I've tried to catch at times where they might be willing to move.
Hard to get them away.
Yeah, it's hard to get them away, and they only have praise for Jeff.
Interesting.
Yeah, they really, people want to work for a mission. They don't want to work for just a salary anymore, especially developers.
Yeah. That's a big change, isn't it?
It's a big change, because they know they can get jobs anywhere. If you're a great developer, a great product manager, a great division leader, you can move around at will. But you have to believe in the mission, and you have to have a lot of respect for your leadership. And, believe me, I try. And, I ask, what is it like working there? And they start going into, it's hard. We work a lot of hours. We do, hourly builds 7 days a week on our software. We're keeping software running for gazillions of people because I'm recruiting out of AWS. And it doesn't work. Because ultimately they go back to...
So what do you attribute the story to? Is it just like there's a couple of people with sour grapes, or just not right fit for some people, or maybe the New York Times went a little salacious? What do you think?
Well, I think it is a tough place to work.
Yeah.
And I think, companies that are winning, it's a fight every day. And he is in a business... Amazon is a very different business, although now that they've disclosed AWS, they're in an enterprise software business that's about a $5 billion business. But think about being in a retail margin business, the velocity, the competition.
Yeah, you're up against Walmart and like single-digit margins.
Well, and basically a mistake can cost you a lot.
Sure. Because
your margins are half or a third or maybe even a tenth in some case of a MuleSoft or a company
Slack,
down
whatever.
Out of Slack.
Yeah.
So, it requires precision execution on the commerce side. And I do think that if asked the right questions, is it demanding to work there? How demanding is it? People are going to give you honest answers.
Right. And it's not for everybody.
Yeah, and I do think the other thing about Amazon that is part of the magic of them is very much the Google magic. We're not telling you everything we do. And people always wanted to know more about that company as well as Google.
Let me ask you a question about being a woman in the technology business. This has been the topic of the year. You've been a venture capitalist for a couple of decades.
Yeah.
We had this huge Ellen Pao trial. Do you feel that the industry is sexist or has been sexist towards women? Has it been hard for you? I mean, you founded your firm, so it's not like you asked for permission from a man to do it. But do you see like rampant sexism in venture capital?
I was the only woman to graduate in my math major. I was one of two in the business major, and I think I was the only one sitting there underground writing code in the quantitative methods lab in college. So, and my dad was a high school basketball coach, so I'm used to the locker room. And maybe for that regard, I've always viewed it as kind of fun and amazing.
Right.
I'm shocked at the small number of women that we have pitching us, even with a woman's name on the door. I'm shocked at the number of women that are graduating in STEM. The number that start is 50% of all the classes. The number that end is about 14%. So we have a small numbers thing. So you're going it alone, and that is hard. I never found it hard, because my dad, the basketball coach, ended up with 5 daughters, and 1 son.
Right.
So I grew up in a jocular environment, with great parents. I never was lonely in those majors, and I know women are. You want to be part of a group. You want to feel that you can belong, and you want to feel like you can be yourself, most of all. And I've always felt that I can be myself. I can dress like I want. I can wear lipstick. I can, prance around as a woman.
Yeah.
And it's never bothered me. And, I've always felt respected by my peers in the software industry. And I've grown up with a lot of guys and girls.
Right.
We've funded quite a few women CEOs throughout the years. Almost all the women CEOs that we funded have become good friends of mine. Our last company, Peerless, Peerlyst, is Limor, a very talented Israeli woman who is the founder and CEO there. It's great to see young women pitching to us.
Seems like it's increasing, isn't it? The number of female founders is still low, but I see a lot more.
It's too low.
It's too low,
way
for sure.
too low. Limor, has technical chops. She's been at 3 security companies before she started this one. She's got a technical education. She's a great communicator. She's great at pitching. Limor, we need more Limors.
Is the benchmark higher for women, do you think? Do you think they have to perform at a higher level than men in the industry to get the venture funding?
I don't think the benchmark is higher, but it's not lower. It's not going to be lowered for women.
Right.
Most of the venture capitalists in the industry have technical degrees and advanced degrees. Most of the venture capitalists have worked 5 or 6 years in industry before they became VCs. And that's not going to be lowered for a woman to enter.
Right.
We have to open the hood of the car we're investing in, whether it's biotech, clean tech, or software, and at least know it's a car.
Right.
And, we're not going to lower the bar just to get diversity, and that's hard.
Right.
We need more young women to gut it out in these STEM majors and to find the joy in, like I did, like coding. Wow, I've got a tool coming from a small town, a lower income family. My tool is not money. My tool is code.
Right.
And it served me well.
When you look at decliner, and I'll get off this topic in a minute, but it's super important, I think, and you were probably one of the best people to speak to. When you see the Kleiner issue with Ellen Pao, Kleiner seemed to be the firm that had the largest number of women at it, Trey, Mary Meeker, et cetera, and she lost. And she lost in a pretty, unanimous way. Do you think that her case had merit, or what did you think when you saw that? Because it was so huge, it loomed so huge in the last year.
Well, I've never met Ellen.
Right.
So I can't, I've never worked with Ellen either, so I can't cast any judgment on her.
Well, what about Kleiner? Yeah.
Capability, persona. Yeah, we've done a number of deals with Kleiner. They've been great co-investors. They're fierce competitors. I know John Doerr well. I haven't done any deals with him recently, but we did a couple in our first fund, and Kleiner recently invested in one of our growth companies. So they're a big investor there called Inside Sales. I have not read all the briefings from the case,
Yeah.
and I think litigation is a crapshoot.
Right.
No matter what. I mean, it's a jury, it's a judge.
Yeah.
It's not a jury of your peers.
Right.
You know, it's even though Ellen was tried in the press many ways by many different
Right.
people, that didn't count.
Right.
So, you know, I view litigation as not the route you should go for careers.
Right. Yeah, it was a little strange. What about Steve Jobs? You knew Jobs, and you saw him come
Yeah.
up too. What was he like? And especially in the early days.
Well, it was interesting meeting Steve and Bill at about the same time. Such different people, and you know, I know that Bill was always mesmerized by the fact that Steve could command a room.
Right.
And I remember years and years ago sitting in a room, you know, probably a 14 by 14 foot room, you know, that had 200 people in, and sitting next to Bill, and Steve was commanding that room, which was a large room at the time.
Right.
And Bill saying, "How can he do this? He's not even a technical guy."
Right.
He was very much like some of the CEOs we see today, where we never feel like we know them, and you know, but they have these huge brains and huge commitment to their own ideas, whether they're successes or failures. You know, a guy like Bill Gates is, you know, on a technical roadmap as well as a market understanding. But Steve had just a very unique view of markets, and he
Right.
stuck to those views. So if you got on the wrong side of Steve, we did work, my company Open Systems, on the Lisa.
Wow.
And we put,
Famously named after his daughter.
yeah, so we put...
Who he denied being his daughter for a little bit, which is weird.
During that point in
Yeah.
time, there was a group within Apple who thought the Lisa could compete with the Unix boxes.
Wow.
And we were the largest Unix software vendor at that point in time. And so they approached us, this splinter group in Apple, to put Unix on that machine. They put Unix on it, and to run our apps and other apps. So we herded together some other app things, and it was a big conference. And so one Lisa's running, you know, the Apple-like stuff. And if you can remember Unix at the time, it had a command line prompt.
Yep.
So we're over there, you know, running like a Sun Microsystems box with
Sure.
Lisa on it, and Steve walks up and sees that command line, and you know, without even caring, he goes, "This has to be carried out of here immediately. Shut it down. I don't even want to look at it."
Right.
And you know, we're not doing this. I don't care what it is. If it has a command line interface, it's out of here. And of
Right.
course, you know, our work on that machine, which every machine was a little, this was a Motorola operating system, was a little different at the time, was completely demolished.
Right.
So, you know, in a moment, it could be over with Steve.
Right.
And we had spent almost a year working with this
Wow.
team in Apple on this other initiative in parallel to the Lisa.
And it's the underpinning now of the Apple operating system, right? It's
Yes.
Unix-based. So it's
Exactly.
quite ironic.
Well, Unix became the underpinning of everything.
Right, sure.
During that period of time, Microsoft, right after I sold my company, I did a project for Microsoft. Should they be selling a Unix operating system? And they decided no. So the Linux and Unix has had a sordid history until today of mostly people saying no.
You, I should point out, you dated Bill Gates for a little bit, or something. You guys were a
We
couple.
did. Yeah.
What was that like?
It was a lot of fun.
Yeah. He was an interesting guy.
Bill and I are still very close friends.
Right.
And he is an interesting guy.
Yeah.
He reads more books than anyone can ever imagine. He's a student of so many things. I mean, anything he reads, he becomes a student of.
Yeah.
What
What do you think about his work now?
I think it's really amazing. I mean, Bill in 1987, when Microsoft was even a newly public company, was thinking ahead to how he should be a philanthropist.
Wow.
And his work is not just the Bill and Melinda Gates Foundation, the work he's doing with his very talented wife, Melinda,
Yeah.
but also the commitment he's made to try to get other people to contribute their
The
net
Giving
worth.
Pledge.
The Giving Pledge.
Yeah.
So that philanthropy,
Astounding. Yeah.
you know, flourishes. So I think it's really, really great. And the initiatives that they're working on, Many of them have been experimental and they changed them over time. Many of them have been super successful. I mean, they eliminated river blindness as their first initiative.
Malaria, just all this stuff.
Malaria stuff's really interesting.
Infant mortality.
Yeah.
It's just unbelievable.
Yeah, it's
Will he be remembered for his work after Microsoft or the work at Microsoft? Which will be the first line, when people remember him 100 years from now? Philanthropist or technologist, do you think?
I think they'll use neither word.
Oh.
I think they'll find a new word for him. Microsoft is really a very alive company. Satya's doing a really great job running the company.
He's doing a good job, huh?
Yeah, well, he's taking risks.
Right.
With people, with products, with partners, with investments, with acquisitions. Microsoft will live for a long time. And, how will they describe Bill as this combination of software visionary and philanthropist? I think it will be a new definition of the word entrepreneur.
Yeah, it's pretty amazing. Listen, Ann, I could talk to you for 5 hours, but I don't want to be super selfish. I know you have a bunch of things you've got to do. It's wonderful to have you in the program, and it's just been great to get to know you. And God, I'm in the same industry, and we do the same thing now. It's kind of mind-blowing for me.
Well, we were always doing the same thing.
Yeah.
I mean, it really is, the one thing we've both done now is we've changed from being visionaries to opportunists because it's the entrepreneurs who really count, and they're the visionaries. We're just plain old opportunists.
Yeah, it is a unique place to find yourself, being the person who gets to give, at least at that moment in time, the opportunity for an entrepreneur to actually pursue the vision, or at least help them pursue it. It's kind of like a heady thing, isn't it?
It's a real heady thing. It's also so fun. I mean, you think you have heard everything, and then some brilliant team or brilliant person walks in, and they give you a lens on the future that you've never even imagined. It's pretty magical.
Are you optimistic about the future? A lot of people are a little concerned about global warming and food supply, pollution. It's a lot of things to worry about in this world. Terrorism, radicalism of religions. Are you optimistic for the human race or pragmatist? What do you think is going to happen 50, 100 years from now when we're gone?
I'm optimistic for the human race because we have so many societies that are rising. I'm a little concerned about the United States on a number of issues.
Yeah.
Crime is rising here in San Francisco. Crime is rising in general. There's a lot of issues that we seem to be out of touch on. Gun control is one good example.
It's kind of crazy.
It's kind of crazy. I'm optimistic that, we will get great leadership that will address these issues. We've always been an open nation. For us as investors in companies, it's all about the intellectual capital or the talent. And so many of our companies have immigrants involved. So many of our companies were an immigrant who came to a Stanford or even a University of St. Thomas, where I'm a trustee. Yeah. And, we are a global reach nation. The idea that we would close our borders or keep them more closed is terrifying to me as a funder of global entrepreneurs who seek our capital structures, our rich capital here, especially in Silicon Valley. And when I look back at our companies and see how multinational they are from founders, that's important.
What would you do in terms of this H-1B visa issue and just, the talent coming here? If you were in charge for 15 minutes and got to set the law for the next 50 years, how would you deal with immigration? How would you deal with these great minds coming to our country?
Anyone who got a PhD at any university, I'd give them here is your diploma, and now you're a U.S. citizen.
Wow.
That's what I do.
Yeah, it's a no-brainer.
Yeah.
Why wouldn't we want the smartest people in our country?
We educated them. They came here to be educated. We want them to stay. That's my...
So the PhD is the... if they get that other carrot of being a citizen.
That's right. Their diploma includes citizenship.
It's such a brilliant idea. I mean, it's a no-brainer, and it's such a great idea. I don't know why. This could be like they could name a law after you. It could be Ann Winblad's law.
I think they actually do that in Canada.
They do it in Canada?
I think so.
So you can't take full
I can't take credit for
You can't
it.
take full credit for it. But if you got it, this could be something you could actually work on, is like actually trying to make this. This makes total sense, Ann.
But then I'd have to join, I'd have to run for political office, which I'm not going to do anytime, ever.
Yeah, not as exciting as getting to see the future
Right.
every day. All right, listen, Ann Winblad, thank you so much for being on the program.
Thank you.
It's just a thrill for me, and I'm sure the audience and the entrepreneurs out there. If you're building a great company and you want to have a legendary venture capitalist on your board, Ann Winblad is the person you want to meet with. And go to humwin.com and follow Humwin on the Twitter. Thank you so much for being on the program, and we'll see you next time. Bye-bye.